In the world of finance, few voices resonate as strongly as Robert Kiyosaki, the author of the best-selling book Rich Dad, Poor Dad. Kiyosaki has spent decades educating people about money, urging them to break free from traditional financial thinking. Now he's turned his attention to the burgeoning world of Bitcoin, offering his unique perspective on this revolutionary digital currency. Kiyosaki recognizes the transformative potential of Bitcoin. He sees it as a powerful tool for individuals seeking financial independence. He understands that Bitcoin operates outside the control of governments and central banks, offering a level of autonomy that traditional currencies cannot match. However, Kiyosaki also sounds a note of caution, particularly during the heady days of a Bitcoin bull market. Kiyosaki's message is clear. Bitcoin is a powerful tool, but it must be handled with care. He emphasizes the importance of education, urging investors to understand the intricacies of Bitcoin before putting their hard-earned money at risk. This includes understanding the technology behind Bitcoin, the factors that influence its price, and the risks associated with investing in such a volatile asset. The allure of quick riches can be intoxicating. During a Bitcoin bull market, when prices are soaring to new heights, it's easy to get caught up in the excitement. Everyone seems to be making money, and the fear of missing out, or FOMO, can be overwhelming. This is precisely when Kiyosaki's warnings are most crucial. Kiyosaki compares a bull market to a stampede of investors, all rushing headlong in the same direction. In such an environment, rational decision-making can be difficult. Greed takes over, and investors often throw caution to the wind, piling into investments without proper due diligence. This is a recipe for disaster. Kiyosaki stresses the importance of staying grounded during these periods of market euphoria. He reminds investors that bull markets don't last forever. What goes up must eventually come down. Those who buy at the peak of a bull market, driven by greed and FOMO, are often the ones who suffer the most when the inevitable correction occurs. Kiyosaki's advice for navigating the Bitcoin market can be summed up in 3 simple words. Don't be a pig. This might seem like blunt advice, but it carries a profound message. It's a reminder that greed is a powerful emotion that can cloud judgment and lead to poor investment decisions. In the context of Bitcoin, being a pig means getting greedy and overextending yourself. It means investing more than you can afford to lose, chasing unrealistic returns, and ignoring the inherent risks of the market. Pigs, as Kiyosaki points out, are often the first to get slaughtered when the market turns south. Instead of being a pig, Kiyosaki encourages investors to adopt a more disciplined and strategic approach. This means setting realistic investment goals, diversifying your portfolio, and always being prepared for the possibility of losses. It's about playing the long game, not trying to get rich quick. Kiyosaki advocates for a balanced approach to Bitcoin investing. He emphasizes the importance of education and due diligence, urging investors to thoroughly research Bitcoin and the factors that influence its price. This includes understanding the technology behind Bitcoin, the dynamics of the cryptocurrency market, and the regulatory landscape. Diversification is another key principle in Kiyosaki's investment philosophy. He cautions against putting all your eggs in one basket, even if that basket is Bitcoin. Instead, he recommends diversifying your portfolio across different asset classes, such as stocks, bonds, real estate, and precious metals. Kiyosaki also stresses the importance of having a long-term perspective. Bitcoin, like any investment, is subject to volatility. There will be ups and downs along the way. Those who panic sell during downturns often miss out on the long-term growth potential of the market. Section 5. Risk and reward. 2 sides of the Bitcoin coin. Kiyosaki acknowledges the potential rewards of Bitcoin investing. He recognizes that Bitcoin has the potential to generate significant returns, especially for those who invest early and hold for the long term. However, he also emphasizes that these potential rewards come with inherent risks. Bitcoin is a highly volatile asset. Its price can fluctuate wildly in short periods, and investors can experience significant losses. This volatility is driven by a variety of factors, including market sentiment, regulatory news, and technological developments. Kiyosaki stresses the importance of understanding and accepting these risks before investing in Bitcoin. He advises investors to only invest what they can afford to lose and to be prepared for the possibility of significant drawdowns. Investing in Bitcoin is not for the faint of heart. Section 6. Beyond Bitcoin, Kiyosaki's investment philosophy. While Kiyosaki's warnings about Bitcoin are timely and relevant, they are also part of a broader investment philosophy that he has been advocating for decades. This philosophy centers around the importance of financial education, taking control of your finances, and building wealth through assets that generate passive income. Kiyosaki encourages individuals to break free from the traditional work for money mentality and instead focus on building businesses and acquiring assets that generate income without requiring active work. This includes investments such as real estate, businesses, and intellectual property. Kiyosaki's investment philosophy is about empowering individuals to take control of their financial future. It's about breaking free from the shackles of debt and building a life of financial freedom and abundance. Section 7. The importance of financial education. Underlying Kiyosaki's investment advice is a deep belief in the power of financial education. He argues that traditional education systems fail to adequately prepare individuals for the financial realities of life. As a result, many people struggle with debt, lack financial literacy, and are ill-equipped to make sound investment decisions. Kiyosaki encourages individuals to take responsibility for their own financial education. He advocates for reading books, attending seminars, and seeking out mentors who can provide guidance and support. Financial education, he argues, is an investment in oneself that pays dividends for a lifetime. In the age of Bitcoin and other digital assets, financial education is more important than ever. The financial landscape is rapidly evolving, and it's crucial for individuals to stay informed and adapt to these changes. Section 8. Conclusion. Investing with wisdom in the age of Bitcoin. Robert Kiyosaki's warnings about Bitcoin serve as a timely reminder that even in the exciting world of digital currencies, the fundamental principles of sound investing still apply. It's about being informed, being disciplined, and never letting greed cloud your judgment. Bitcoin, like any investment, carries risks and rewards. It's essential to approach it with a balanced perspective, understanding both its potential and its limitations. By heeding Kiyosaki's advice, investors can navigate the Bitcoin market with wisdom and prudence, making informed decisions that align with their financial goals. In the end, Kiyosaki's message is one of empowerment. It's about taking control of your financial future, making informed decisions, and building a life of financial freedom and abundance. Whether you're a seasoned investor or just starting out, his insights provide valuable guidance for navigating the complex and ever-changing world of finance.